Hey guys, welcome to a new video. So today I'm going to be talking about MSTY versus MSTW. So MSTY is of course YieldMax's MicroStrategy ETF, and MSTW is the MicroStrategy version from Roundhill. So that's what we're going to be talking about today. But at the moment, very exciting time in the market because Bitcoin is absolutely ripping. We're at all-time highs. I think it just hit 124,000. But it now seems to be trading at 123,000 or 900 or somewhere around there. And what's MSTY doing? What's MicroStrategy doing? Absolutely nothing. It's going down. I don't know what's going on with MicroStrategy, but it seems we're at all-time highs with Bitcoin, and MicroStrategy is not performing. If we look at that chart from Bitcoin, and then you look at this chart from MicroStrategy, we're at all-time highs in November 2024. And now we're trading around $389. So MicroStrategy isn't even keeping up to Bitcoin, let alone being a leveraged play on it. So this, even me as being an optimist from some of my previous videos, and I am still a bit of an optimist. I'm hoping that this is just a coiled spring and that we're going to unleash into some positive price action. But even I'm getting a little bit frustrated with the MicroStrategy price action, which of course affects MSTY in a big way and MSTW. So let's just hope that this starts improving, because it is getting a little bit frustrating, and we just want our income ETFs to do better so that we can start getting those higher distributions and actually recover our share price as well, because most people are probably down on MSTY, like myself. I'm down on MSTY. So anyway, let's get into some other exciting news was yesterday was announcements for Group B, which was PLTY and NVIDIA, and PLTY is pumping, and it had an absolute banger of a distribution announcement, $7.49. I think that's a record. So I actually sold a few shares of PLTY, just a small, I think it was about 5% of my shares, to get into some other stuff, because Palantir has been ripping. I think Palantir is a little bit overvalued, so I sold some. But Palantir, I don't know, maybe it was the wrong decision, because you think it's overvalued and it just keeps going higher and higher. And I'm like, when is Palantir going to stop? Like, everyone's saying it's overvalued, but then it had a great earnings. It made over $1 billion. Is that a quarter? I don't know the exact amounts. But yeah, it had a great earnings report, and that obviously pumped the price of the underlying of Palantir. And of course, that has given us this incredible distribution of $7.49. NVIDIA, 83 cents, pretty like, it's okay. LFGY, consistent as ever, 44 cents. And ALTI, everyone's loving the ALTI. Everyone's getting on the ALTI bandwagon. Another 10 cents. Look at how consistent that is. 10 cents, 10 cents, 10 cents. That's just, look at that in terms of my Australian net, 221, 220, 220. Look at that consistency. Who doesn't love that as weekly income? And of course, I've been getting into the Roundhill weekly ETFs. So the Coinbase one, MSTW, which we're going to talk about now. And so I'm actually been increasing my positions in these to get weekly income from each of these ETFs from Roundhill. And I just opened a position with the COYY, which is that Rex or Defiance? Can't even remember. But anyway, just to kind of test that and see how that does. I think that does like crazy high distributions. I think the last one was 180%, which is just silly money. But anyway, we're here to discuss MSTW versus MSTY. So MSTY, most people that watch this channel probably already know what MSTY is. It is the income ETF for MicroStrategy, generally using a covered call income strategy to create income on a monthly, not a monthly, a full weekly basis. Generally has a high distribution rate of around 80. It's usually a bit higher than that, around 90, 100%, but MicroStrategy hasn't been doing so well. So it's currently doing about 80%. Still a great fund. I'm still up on it as total return over time, but the share price has been lagging a little bit because of the performance of MicroStrategy. So I think most people are familiar with MSTY. It is kind of the GOAT, still the biggest fund within the YieldMax space in terms of assets under management. But it looks like ALTI is coming for that crown, and coming pretty quickly. I did a video on ALTI a few weeks ago, and within the time span of me recording that to what the assets under management for Alti is doing now, it's like, I think it's almost doubled. Like, it's insane. I see it everywhere. If you're on Twitter, everyone is talking about Alti, and it just seems to have that consistent performance now. But anyway, we're talking about Misty and MSTW. So this is the competitor to Misty from Roundhill. Now, Roundhill's weekly ETFs have been doing extremely well. They're becoming very popular because mainly through a few things. One of those things being the uncapped upside. Now, you'll know that with YieldMax ETFs, the upside is capped. So if MicroStrategy goes up 10%, Misty may only go up 6 or 7%. It's capped. You don't get that full upside. The Roundhill weeklies are different. They have leverage in them. So if you look here, the MSTW aims to provide weekly distributions and calendar week returns before fees and expenses equal to 1.2 times or 120% the calendar week total return of MicroStrategy common shares. What does that mean? That means that this is a leveraged ETF, so there's a little bit more risk to it. So if MicroStrategy goes up 10%, then MSTW, because it's leveraged at 120% or 1.2 times, goes up 12%. MicroStrategy goes up 10%, MSTW goes up more at 12%. There's that extra small bit of leverage. Now, that's a good thing when you're in a bull market and the fund's doing well, but in a bear market, that is not doing well. If you're in a crypto winter, or if the market's just not doing well and the price action is going down, then if MicroStrategy goes down 10%, then MSTW is going to go down 12%. So this is a riskier play in terms of price action. And so for me, there needs to be nuance in terms of when you position yourself and when you get into these things. You don't want to be getting in at the top of a bull market and just to ride it all the way down. You'll get absolutely crushed if you do that. So when you buy is important, and just knowing all of these risks is important. So this is not financial advice. I'm just talking to you about these ETFs and what I'm doing, because I have started moving some of my positions into these Roundhill weekly ETFs just because I like that uncapped upside that YieldMax doesn't really provide with their ETFs. So why MSTW? It's weekly. So as we know, Misty is monthly. It's not. It's 4 weeks. Every 4 weeks you get a Misty distribution. With MSTW, it's every week. A lot of people, a lot of retail investors like weekly distributions like Alti. People seem to like being paid weekly. Enhanced exposure. So what we just talked about. MSTW seeks to amplify returns by targeting 120% of MicroStrategy's performance. That's what we said. MSTR goes up 10%, this goes up 12%. Same for when it goes down though, so there's that added risk. Powerful combination. MSTW provides a potentially powerful combination of single stock leverage and weekly income. So you get the income as well as that potential upside, that 120% extra leverage. So you're going to go up quite a bit. If MicroStrategy does really well over the next few months, which I'm hoping it will, because I feel like it's got to be a cool spring. They've got over 600,000 Bitcoin, and the price action is going down with Bitcoin's at all-time highs. I don't understand it unless like something's going on. I don't know, but it is starting to get a bit frustrating, the price action with MSTR. But back to this fund, distribution rate 90%. So even though this, and these use different strategies. So Misty uses kind of a standard covered call strategy, and MSTW uses swap agreements with listed call options as well to create the income. So their income strategies are slightly different. That's something to bear in mind. You can download, there's a prospectus and fact sheet which you can do more research on to find out about this. But the reason I like it is because if you buy well, you buy in dips, or you buy when it's low. Like even now is pretty good because MicroStrategy is below that 400 mark, and you think that it's going to go up, then this is a good bet because you're going to get all that upside price action as well as a good distribution rate. So you're getting 90% distribution, not every week, but this is an annualized rate, obviously. You're getting weekly distribution at an annualized rate of 90%, roughly. Obviously, that changes week on week, as well as that uncapped upside. And that's why the weekly ETFs from Roundhill have been doing so well, and that's why I've been getting into them more just because I really, the capped upside from YieldMax does irritate me a little bit. It's like, it's a bit frustrating when you see the underlying doing so well and the upside is getting capped on the ETF, and then the distribution is coming out of the ETF and it's struggling to recover. And that's a little, like for PLTY, it's fine. It's absolutely ripping so hard. It just, the distribution gets taken out of it and it rips up again and it just recovers like within a couple of days. It's good now when it's in a bull market, but if Palantir does suddenly become overvalued and the price starts going down, then people are going to get hurt. Your position is going to get hurt. But so will it in this case. It will get even more hurt. So that's one thing to consider, is that if you buy the top, so you have to understand what's going on with the underlying stocks in these ETFs, because if you buy at the top or anywhere near the top and the market starts to go down, you're going to be in a bit of trouble. So just something to bear in mind. Obviously, this is just my thoughts on it, not financial advice. Please do your own research. But okay, so let's look at what happens. So MSTW is brand new, not brand new, it's 2 weeks old, so we can't really take its performance with any real kind of analysis or kind of, real thought of what we should do, because it started 2 weeks ago, July 24th, and MSTY is down 4.66% because MicroStrategy has just been suffering, and MSTW. So this is a good example. So MSTW has that leverage in place. It's 120% exposure to the underlying. So if MicroStrategy goes down 5 or 6%, whatever it is here, then MSTY is going to go down a very similar amount, but MSTW is going to go down even more because it's got that extra amount of leverage. The 120% exposure means that it's got more risk to the downside. And that's why MSTW, over the first 2 weeks of its launch, is down more. This is total returns, by the way, than MSTY, because it has that 120%. So when it's down more. When it's up more. Just something really important to consider. So you've got to know when you're getting into it. But this is at 2 weeks, so it's really not a fair time frame to take into consideration. So let's look at the Coinbase ones, because the Roundhill Coinbase ETF COIW has been out a lot longer, so I think it's a much fairer comparison. And we're just going to add COII, which is that the Rex or the I think that's the Rex one. So these are the three kind of bigger Coinbase related income ETFs on the market at the moment. And this is over the last 2.5 months, I believe. So it's kind of inception from COII. So you'll see here that COIW over the last 2.5 months is up 28%. This is total return, so share price and distributions, up 28%. COII up 14%, and Coney up 6%. So Coney, as the YieldMax one, is up the least. And that's because Coinbase did really well, but Coinbase, see, Coney's the one in orange here, this line here, and you can see that it just doesn't have the upside that COIW have, or that even COII has. So when the market is doing well, when we're in a bull market, which we are currently in the crypto space, things are just going to get better in the next month and a half, in my opinion. Again, no crystal ball, not financial advice, but it's going to get better. There's more liquidity getting into the crypto space. Ethereum is absolutely pumping, and when Ethereum pumps, it's usually a sign that altcoin season is about to happen, and liquidity goes from Bitcoin, which is now at all-time highs, into Ethereum, and then into the altcoins. So that's what's looking like is going to happen over the next couple of months. So very good news for Coinbase and all the exchanges, Robinhood, all those guys, and also should be good for MicroStrategy. But as I said, Bitcoin's at all-time highs and MicroStrategy is not. So something's going on there, whether it's how they're diluting stock, tapping the ATM to borrow more money to buy more Bitcoin. It's either a coiled spring or we're all in this thing and it's just not going to recover. And I think we'll find out pretty soon in the next 2 or 3 months. I still believe that Bitcoin will be hitting 150, 60, 180,000 by the end of the year. I think it will be performing really well as we go into the next 3, 4, 5 months. So we'll see for MicroStrategy. But getting to this point, COIW is up the most, COII, because of that upside potential. And so this is what kind of frustrates me a little bit about the YieldMax ETFs, is it's got that capped upside. And I don't love that when I'm quite an active investor and I'm actively trying to buy the dips and buy at low point. Like I bought a lot during the tariff chaos at the start of April, and yet the the share price appreciation hasn't really gone too crazy with the YieldMax ETFs because it doesn't have that upside. It's capped. Whereas if you were in the Roundhill weekly ETFs from beginning of April, there's probably only a couple of them because they're quite new, then you would have done really well. And I'll show you, because COII, I'm just going to remove that one. Mouse isn't working. Here we go, COII. So I remove COII, and now we're in just Coney and COIW. So that's the Roundhill one, COIW, versus Coney, the YieldMax one, and this is over the loss. So this is through the low period. So this is an interesting comparison because this is essentially how the MSTW versus MSTY will go as well. So you can see blue line is COIW. So in a bear market or in a downturn, in a big dip like it was in April for the tariffs, this is when we were leading up to the tariffs, you'll see that down here, COIW was down a lot more than Coney, right? So this is the extra leverage at play. This is the 120% leverage exposure. So COIW was up a lot more. But then overall, because we've had that pump for Coinbase recently because of stable coins and all the crypto legislation, the overall net total net return is 23% positive for COIW, the Roundhill one, and -2 for Coney. So it depends on when you're getting into this, and that's what. So like if you'd got in around the tariff time, so from kind of beginning of April to now, this is the difference, right? This is what a bull market would look like if you get in from from the beginning of April in the big dip to now. You would be up 128% on COIW versus 53% on Coney. So you can see that that upside really has a huge factor in your total returns from the Roundhill ETFs. It really plays a big part. But again, just important to know when to get in. You need to get in at low price points in order to make sure that you're getting so that you're getting into price appreciation territory. You don't want to be getting in down lows. Like if we do this again, we go max and we go from here, if we can do this, if we go from here down to the lows, then we'll know that, okay, it doesn't really show it very well, but 31% down to 37%. So there's more risk with the Roundhill ETFs. This kind of show, I'll just talk about the what this kind of the summary of this. So like if you're thinking about getting into one, or if you're thinking of switching, like I actually sold a little bit of MSTY to get into MSTW, but I also sold a lot of things. Like I sold my AIYY position just before it tanked even more from earnings, which was good. That was pretty lucky. And I put it into MSTW. So if you had some money on the side, or if you're looking to swap, this is what I think is important to know. So which one to choose, MSTW or MSTY? MSTW, if you're willing to risk the extra leverage, 120% for the extra potential upside. This is what we talked about. There's more upside. There's uncapped upside and more if you go for MSTW. It's like owning the underlying stock, but also getting a little bit extra. But of course, that comes with the downside that we talked about as well. If MicroStrategy goes down 20%, this is going to go down 24%. So if you're willing to risk, if you're okay with a little bit of risk for that extra upside, MSTW is the one to go for. If you want uncapped upside, so unlike YieldMax ETFs, where there is capped upside and they rely mostly on their income strategy to create really high distributions consistently, that's why they're kind of capped in a way. This gives you uncapped upside. So if you want that, MSTW as you go. And 3, if you're okay to wait for a dip, we're analyzing a good low entry price based on MicroStrategy. So again, we talked about April. If we go back to So here's MSTR. Like if these if these Roundhill weekly ETFs had been around here, I think only just a couple of them had launched by this time. Coinbase was one of them. This would have been the perfect time because you've analyzed a big dip. People are in fear. There was talks of a recession. This would be the time to go hard, in my opinion, on the Roundhill weekly ETFs because the upside potential is so much greater. Obviously, it's very hard to time a bottom or any low price, but you can sort of feel it by the feeling in the market. People are scared. There's fear in the market, and that's when I was getting a lot into MSTY. I was getting into MicroStrategy, the underlying. I was getting into all sorts of stuff. I had some cash on the side I was getting in, but now in hindsight, I should have kind of researched Roundhill a bit more and put more into the Coinbase one, COIW, which was available then. But this is just an example of what you need to be kind of analyzing the market, the price action, and sentiment in the market. Is it fearful? If it is, it's usually a good time to get into some of these positions. So that's just something to consider. If you're good at kind of analyzing that price action and you can wait for a dip, then it's a good time to get in because you don't want to be. So you don't want to be getting in. Where were we back at MicroStrategy? You don't want to be getting in here and then riding it down. That is going to absolutely destroy you with these Roundhill ETFs. You'll be getting, because it's got that extra 120% leverage. So you start from here and you'll go even further down because it's got that extra 20% that you'll be down. So that's what you really want to avoid. So there is more risk, and that's just something really to take into consideration. The other thing is if you prefer weekly payments. A lot of people do. So MSTW is probably your go-to if you want to be paid weekly. MSTY, if you're after, so why would you choose MSTY? So MSTY, if you're after consistently high monthly distributions, it generally pays really well. Oh, okay, it's been lagging a bit recently. The MicroStrategy volatility has come down a bit. Bitcoin's volatility has come down a bit, but essentially it's still like it's usually over 80%. It's usually around 90, 100%. So that is pretty amazing considering. So if you just want those consistent monthly distributions, MSTY is still a great option. If you want to drip reinvest your distributions without worrying about the price action too much. So we talked about, you know, kind of getting in dips for these Roundhill ones. That's really important because otherwise you'll get absolutely look at this from the top of COIW down here, how much it's down. Whereas the volatility, this is Coney and this is COIW. So Coney, it's much more stable. There's not as much volatility in the price action. You don't go up as much, but you don't go down as much. So if you're dripping in, you're just getting the distributions. It might be the better play because you're not, you know, suspect to the price action of it really coming down, getting really hurt in that. So I feel like if you're just dripping, you're not paying much attention to the price action, MSTY is probably still your go-to. And then thirdly, if you want to avoid the risk of added leverage and price volatility. So kind of what I touched on. So you don't want the risk of that added leverage. You don't want the risk of that huge downside potential, and you don't want that huge volatility. You don't want to be looking at the market being like, oh, is it a good low price? Is it a dip? Should I get in now? So that's kind of my analysis of it. Now I am quite an active investor. I like looking at the charts, and I do like getting in when there's dips. I do save some of my distributions for reinvestment when the market is down. We're in quite a green market at the moment, apart from MicroStrategy, which I'm still investing into. So I usually park a bit of cash to then redistribute when there's a bit more fear in the market, when the market's dipping a bit more. So, and I think that's what I'll do from now on, is just wait for those bigger dips and get into these ones. PLTW is another one which I'm not in, which has been absolutely going gangbusters for Roundhill. But a lot of these, the Robinhood one's been doing really well. So I have been creating larger positions in these Roundhill ETFs. I'm still like, MSTY is still my biggest holding, and Coney, it's come down a little bit, but it's still I think it's now second equal to my COIW position, because that's now 1,000 shares, which is quite a lot. So I think they're now kind of tied second, but I'm still very bullish on the crypto space for the next few months. I think it's Misty, Coney, CYW, MSTW are all going to do really well over the next few months. But it's just interesting to see how the game is changing a little bit between YieldMax and Roundhill. I've seen on Twitter they've kind of been sniping at each other a little bit with these tweets they're putting out against each other, which is quite interesting to see. So it'll be interesting to see how it plays out over the next few months, as Roundhill does seem to be scooping up a bit of the share market from these weeklies that have been evidently from the data performing very well. So let me know what your thoughts, if you're staying in the YieldMax, if you're going to reinvest in YieldMax, if you're going to look at these Roundhill weekly ETFs that seem to have been performing very well. Let me know what you think in the comments. Give me a like, give me a subscribe, and thanks for listening. I'll see you in the next one. Cheers, guys.